Morning, market movers for Monday. It is, what is today? January 27th, 2014. So today we're actually starting the week after Friday's huge drop. We had a 318 point drop in the Dow, about 90 points on the NASDAQ, and about 38 on the S&P 500. Most of the indexes are, looking better today, although the NASDAQ's down a few points. The Dow's up mainly because Caterpillar had really good earnings. That stock's up about 5% so far today. The real key is what's going to happen this week. We've got Apple reporting after the market today. We've got a ton of economic data this week. We have the Fed meeting on tomorrow and Wednesday. After Wednesday, we'll get a decision, or on Wednesday, we should get a decision on further tapering. Most economists believe we're going to get another $10 billion in tapering, which is what I think will happen, regardless of the employment number for last month, which was pretty ugly, the 74,000 jobs added when they were expecting almost 200,000. So the Fed's probably still going to taper even with that number and stay on pace to try to get us completely weaned off of stimulus from the government before the end of this year. So they're probably going to continue with a $10 billion per month taper unless something really crazy happens, and I don't think that employment number is enough. Lots of earnings this week. We actually have 25% of the total Dow component companies reporting this week, and we have a third of the Dow components and 25% of the S&P 500 reporting this week. So tons and tons of earnings reports coming out. Again, Apple today, lots of other technology companies reporting this week as well. So it's going to be pretty interesting to see how the tech sector looks this week after a really good year last year. Lots of profit taking on Friday. If you look at the sectors that did the worst on Friday were the top four that did the best last year. That's where the money was coming out, where people were taking profits, which makes sense because tax time's coming up. And when the market turns down after such a big year, you can expect people to take profits. So we'll keep an eye on things. We did break through the 50-day moving average on the chart. We could see the market get back down around the 1650 level on the S&P. That would take us back to basically where we bottomed in early October, which I bought that dip, luckily, and made pretty good money between beginning of October and the end of the year. And then I took money off the table, went back to cash for the most part on January 2nd. And since the beginning of the year, we're down about 4% or so, 3 to 4%, depending on which of the indexes you look at. So far, that's been a good move. We'll see how things go, but if the market can rebound this week, find some stability, maybe if the earnings are good, maybe if the Fed didn't taper, there's some possibilities out there that could rally the market back up. Or investors may just see Friday as a buying opportunity and think that things are cheap and buy, which I would disagree with, but you can't fight the tape, right? The market's going to do what it's going to do. If the downside continues this week, I would say that would be confirmation that we're in a correction phase, and then I would look for at least a 10% correction, which again would take us probably back pretty close to the October low, around 1650 on the S&P, or we could go lower than that, maybe 15-20% correction, which could take us all the way down. If we go 20% down, we're looking at maybe 1500 on the S&P 500. So a lot of potential for downside. Valuation is very expensive. Revenues so far in this earnings season have not been that impressive, although bottom line earnings have been okay. So we'll see how we do this week with all the earnings reports and all the other information. There's some other economic data coming out, but the Fed meeting is going to probably be the biggest single information point that we're going to get this week. We'll see how it goes.